Retired by 18, worth 5 B's by 21. Still got time to ruin your favorite trader's career. Oops. It's crimson, baby. The Kohrs ain't cute no more. Dirty little ticker.
I turned your mama's rent into yacht fuel. Did a hostile takeover just to skip school. My charts got curves, they thick like sin. Every candle green like I bribed the wind. Your portfolio limp, Viagra can't fix it. While I swing stocks and swing something explicit. SEC trying to cuff me like I'm bad news. But I ghosted them and your girl in the same mood.
Crimson Kohrs. Ooh, he bad, real bad. Crimson Kohrs. Blew up your stock and your dad. Crimson Kohrs. He's toxic, but we like it. Crimson Kohrs. Even his L's get excited.
Yeah, I'm richer than your pastor preaching grace. Got your girl trading panties for a Cohen base. Velvet talk slick, but he built like a tax. While I'm riding bull runs with stocks on my back. Your game's micro like your attention span. I'm margin slap fools with a platinum hand. You follow trends like a lost ex-hoe. While I reroute futures, watch my profits grow.
Bitcoin daddy. Crimson Kohrs. He toxic rich CEO sleeves. Crimson. Got my 401k weak in the knees. Crimson Kohrs. Yeah, he rude, yeah, he raw. Turn Velvet's fan base into little pussy bitches. Oops. Hey ladies, I know I'm cocky, but that's just cause I own everything. Literally. Your boyfriend sells options, I sell his dreams back to him. Marked up. Now tell me again why you still with that broke boy. Exactly. Switch sides, baby. Cue the guitar, I'm done talking. Switch sides, babe.
Oh, brother, oh, brother, oh, brother. Good morning, folks. We're back. I know. I felt it too. I felt over the last week there was a disconnect because we weren't in our normal setting. We didn't have our normal schedule. We didn't have our normal show. So as fun as it was in Vegas, it's always a great time to hang out there, catch some shows, bet on a couple, I don't know, hands of blackjack or something like that. Very happy to be back. Very happy to hang out with all of you. It is not only just a normal Monday, but we're kicking off a whole new week. But really, we're kicking off a whole new month. We're basically here in the summer. It is June. We made it. We survived May. We're here in June. The sun is out. The birds are singing. The sun is beating. And ideally, we're going to be making some money here in the market. So, folks, I'm happy you joined me. I know that there was a little bit of a hole in all of our hearts. The fact that I was gone last week and we couldn't really do it as we normally would. But, hey, we'll be making up for it today with a little bit of a double feature. So, yes, this morning we were going to be running the normal show. But like I said, I kind of want to pay you guys back. And we do have a specialty afternoon show today because Jerome Powell will be doing a live press conference at 1 p.m. Eastern. So the plan for today is the normal MK show, 9 to 11. We're going to take a little bit of a break. We're going to go get a lunch, maybe a little roast beef sandwich. Then we're going to come back at 1 p.m. Eastern, right at the end of lunch hour, to listen to what the chairman of the Fed has to say. If you look on Twitter/X, whatever you want to call it, if you look at it, there's a lot of people saying, oh, he's going to be announcing his retirement. He's not. He has a full year. His post doesn't really end until May of 2026. So basically 11 months from now. So I highly doubt it's that. If anything, he's going to be giving us an update on the data that they're seeing, his most recent talk with Trump. They spoke last week. So I think we're going to get a breakdown of the current situation, both politically, economically. I think we're just going to get his current thoughts. I don't think this whole thing of, oh, he's stepping down, that's just the internet being the internet. I wouldn't be by any means reading into it. I can't say it's definitive. I mean, I guess it's a non-zero probability, but I think it's very, very, very close to zero that he's announcing his retirement. That by no means would be my base case. So I just want to throw that out there now, and obviously I could give you more of a breakdown on that a little bit closer to the end of this morning show. But between now and market open, we have some things to go over. Of course, right now, if you look in pre-market trading, things are a bit red. Most likely that relates to trade tensions once again boiling over. This time, not just with one country, it's with China and then a bloc. It's the EU. So on one side with China, we have both sides accusing the other side of not sticking to their side of the deal. And then with the EU side, basically Trump is mad with how slow they're going. So he increased the tariffs specifically on steel, and then the EU's clapping back about that. So I want to get into that. And then we also have a little bit of just global drama with the whole Ukraine-Russia thing. So I want to get into all of that very quickly. And then I want to dive into what's going on in the U.S., specifically not really Tesla, but I do want to get into the drama or with Elon. Elon kind of officially stepping down from Doge. He did a little bit of a press conference not too long ago with Trump. He had a black and blue eye. Some people are actually suggesting it was dissent. I guess they got into a physical altercation. The Treasury Secretary, once again, I wasn't there. I don't know if it's true or not. That's just what people are saying on the internet. So we're going to get a bit into that. And then, of course, just because it's a new week, I wanted to set you up with all the major macroeconomic events of the week. We could talk a bit about seasonality. In reality, the seasonality doesn't get exciting until the end of this month, because at the end of June to the end of July, there's a 5-week period where the bulls are clearly in control. But obviously, that's about 3 weeks out from now. So we'll do a bit of seasonality. We could do some option structure stuff of where the big guys are being positioned today. I was already talking about this pretty early on with the Discord today. Today, barring any crazy news, the options market is not set up for some big movement of a day. We're caught up right now in a positive gamma node, which, remember, they kind of act as black holes. They're not really bullish or bearish. It's more of just a mean reverting. There's some negative gamma above us if we're able to break out. But as of right now, we're not really seeing new bets positioning for a breakout, at least not today in the 0 DTE. If we start to break down, there's a lot of positive gamma below us. So even if we start to fall, I don't think we're going to fall that hard. And it's just like we're kind of like in this awkward in between. So if anything, we're kind of waiting for some sort of headline-based catalyst. At least this is just my guess of what's going to happen. I think we're waiting for some sort of headline type setup, like impetus to get us going, and then we'll get that technical breakout and or a breakdown. So that's kind of where I'm at overall. I am not preparing for some amazing trending day. We're just simply not seeing that setup yet. So I just wanted to call that out. And with all that being said, welcome. I'm sorry we had a little bit of a strange week last week. Hey, it was fun though. Obviously met a lot of cool people, got to do a lot of cool things, but also simultaneously, I'm very happy to be back here with all of you. And let's just see if we can put all of our degeneracy together and make a little bit of money. Speaking of making a little bit of money, very quickly, a shout out to Crypto.com, which officially has partnered up with Rumble, and they are doing the Freedom Jackpot. On July 4th, the best freedom day of the entire year, they are going to be giving away one entire Bitcoin, which is now trading over $100,000. It was 105 last time I checked. So here's what you have to do to get involved in this. Pinned to the top of chat in the description of the video, create your account on Crypto.com, or you could go to Crypto.com. The referral code is right here. It's Goonie. I think my big head is blocking it, but right here, use Goonie. And every time you trade $50, you're going to get another chance in this jackpot. Once again, every $50 you trade of crypto, and they have over 400 different tokens and coins that you could trade. They have a wide array of all of them. Every $50 worth of any of those that you trade, that is going to be one additional chance within this jackpot. And then obviously they are going to be doing the giveaway on July 4th. It is their Freedom Jackpot. With that, remember, over the past couple of years, one of the major things we learned is if you're keeping crypto, probably shouldn't be on exchange. I would highly recommend using your own wallet. That's just a better safety. Obviously, I am not your mom. You could do what you want, but just being in this field for years now, I've learned that safety is paramount. So this is obviously a very enticing opportunity, but where you choose to store it afterwards is also very, very important. So I would say best of luck with this. Remember, every $50 you trade of one of their 400 plus tokens or coins, you're going to get another opportunity. But if you choose to just kind of let it set and forget, like the investing type of a thing, I would highly recommend looking at safer ways to store your crypto. So check that out. Pinned to the top of chat in the description of the video, and shout out to crypto.com and congrats on their new partnership with Rumble. And now let's take a little looky-see at the market. As you can see, the SPY slightly red, the Q slightly red. The Qs are down 0.4%, the SPY is down 0.3%. Bitcoin trading at 104,000. And then I was just checking out Palantir this morning because this is the gift that just keeps on giving. Doesn't matter if the market's not moving at all. I feel like every single time I look at Palantir, it's just up another 5%. It just keeps going and going and going. I have some Palantir right now, but I know people in chat are way more into it than I have been. And I have to admit, I am very jealous about it. I am very, very, very jealous about it because you guys are absolutely crushing it. And for as often as you guys have been talking about it in chat, PLTR, I have no one to blame but myself. I have some, I don't have enough. I know you guys have been watching it for months, if not years now, and congrats to you, especially to the people who were dollar cost averaging, buying the dips. This stock is just a monster. It is an absolute monster. So I just want to say congrats to you, especially when the market, it's not really bullish, it's not really bearish. We're just, as Spot Gamma was calling out, we're kind of stuck in neutral, but then yet there are individual equities such as Palantir, one of a handful, that are still just absolutely crushing it. So shout out to all of you who have been very, very right on that one. All right, stock futures slide as global trade tensions rise to start the new month. If you're just joining in right now, I kind of lightly touched on this, but basically we have a trade tension concern with both China and the EU as of this morning. Treasury yields tick higher as China says US breached the trade deal, which is interesting because just the other day we were saying they breached the trade deal. So basically, both sides are saying the other side is not really playing fair. China counters Trump's accusations of Geneva trade deal violations, says U.S. undermining the consensus. China pushed back against Washington's accusations that it had violated the Geneva Agreement. The Trump administration has increased tech export restrictions and put pressure on Chinese students' visas. Tensions between the U.S. and China have risen beyond just trade. Pentagon Chief Pete Hegseth, warned Saturday that the threat from China in the Indo-Pacific was real and imminent. So this is kind of a multifaceted issue, if you will, where yes, we are basically making it very hard for any foreign national to get visas into the U.S. right now. We have Bissett, the Treasury Secretary, saying that China's withholding products from us. And then you have Hegseth saying that just the military threat in the Indo-Pacific is real and imminent. And then they're pushing back and saying that, hang on, you're putting extra pressures on us, especially in the tech sector, especially with the semiconductors. So it's a lot of he said, she said, and we're going to find out if they can both work together and calm things down and we see the market pop, or are they both going to have a little bit of an ego hubris issue, and then all of a sudden we're going to go back to square one, or maybe even square -1, and then all of a sudden the market falls. So time will obviously tell on that. Trump and Xi are likely to talk soon about trade, though no date has been set. So we are getting a bit closer to both presidents, President Donald Trump and President Xi Jinping, actually talking, which I think would be a good development. You never know with these binary events. Maybe the talks go south, but I would assume both men are going to come in wanting a solution, because this is, right now, I think it's a pretty fair argument that it's mutually assured destruction. White House National Economic Council Director Kevin Hassett said that the President Donald Trump and China's President Xi Jinping could talk about trade as soon as this week. My expectation is that both sides have expressed a willingness to talk. He noted, however, that no specific date for those talks has been set. Hassett's remarks come after Trump accused China of breaking its trade agreement with the U.S. So, this whole thing, and just to recap a little bit of what I missed out on last week, we had some major things actually go down, because for a bit there, they actually, some judges with the International Trade Group, or whatever the hell it's called, actually ruled the tariffs in the U.S. to be illegal. Not the tariffs themselves, it was more of the manner in which they were executed to say that they are illegal. So once again, we unfortunately couldn't cover that news in real time, but I tried to make a quick update video on it. Well, we did it in part of a live stream. Tariffs in themselves are not illegal. What the judges ruled was basically the power in which Donald Trump and the administration executed them, basically saying that's not where you execute tariffs. So even though we're waiting to hear that play out, and most likely it'll be rapidly moved up to the Supreme Court level, in the meantime, he's still allowed to execute them. So right now, in real time, as we're talking, as we're chatting, as we're getting ready for another trading day, the tariffs are still live. A different judge was basically saying, okay, while we're waiting for these to a different court to decide if it is or isn't legal, they're going to be in effect until we find out another judge is ruling, and most likely it's going to be the Supreme Court. So it's a whole wild situation, but that obviously played out last week. And that's when we saw they were ruled illegal. The futures market exploded. And then by the next morning, when we had Navarro, Hassett, and Bessent basically saying, no, they're going to be back. By the next morning, the market had come already back to where exactly we were. So that whole situation in itself is a pretty messy one. And then we now have further complications on the trade side, obviously, with what's going on with China, but it does not stop there. The EU is prepared to impose countermeasures after Trump doubles steel tariffs to 50%. The EU criticized the U.S. President Donald Trump's moves to hike tariffs on steel imports, saying it adds further uncertainty to the global economy. Trump announced Friday he was doubling tariffs on steel imports to 50% from 25%. The EU spokesperson said it had prepared to impose countermeasures, including in response to the latest U.S. tariff increase. If no mutually acceptable solution is reached, both existing and additional EU measures will automatically take effect on July 14th or earlier if circumstances are required. Now, what's interesting about this is the actual tariffs from our side on steel are going to be going into effect this Wednesday. So even though they're setting the July 14th date, basically 5 to 6 weeks out from right now, in reality, we're probably going to hear about it even sooner, as in maybe potentially by this Wednesday. So definitely please pay attention to that. So you have to pay attention to, are the tariffs legal or illegal? Pay attention to what's going on with China. Pay attention to what's going on with the EU. If you watched the update video last week, we might be hearing something from Japan pretty soon. And then on top of that, obviously last week we had the important macroeconomic developments of both inflation and GDP posting a better number than expected. And then this week we have a whole host of macroeconomic numbers that I'll be going over. But then don't forget, we also have a little bit of an issue still in Ukraine and in Russia. Ukraine says it destroyed dozens of warplanes deep inside Russia. A clandestine drone attack, 18 months in planning, deals biggest blow to the war against Moscow long-range bomber fleet. Russia and Ukraine set to restart talks after Kyiv hits bombers. So I don't know if they're best going to be starting these talks off in the most rosy of attitudes. They literally just bombed them and took it out, and now I guess they're restarting their talk. So that's definitely an interesting one, but here's what Bloomberg has to say.
I mentioned earlier, Ukraine staging a series of strikes reaching deep into Russia, Moscow launching a heavy attack of its own on Kyiv. This latest escalation coming ahead of a second round of peace talks scheduled for Monday in Istanbul. For more, let's bring in Bloomberg's Michael Heath. So even with these peace talks scheduled, it sort of really intensified business as usual when it comes to fighting on the front.
Yeah, I mean, but these were some extraordinarily audacious attacks by Ukraine. I mean,
right.
According to our reporting, they've moved these drones around in wooden houses inside Russia, and they've had drone operators there. I mean, they went into Siberia to attack airfields, Tu-95 bombers, which transport nuclear weapons. It's part of Russia's nuclear fleet sort of thing. Not there were nuclear weapons on them, obviously, but that's sort of their strike capability. And
Wild.
President Zelensky, Ukraine's president, said that this has been more than 18 months in the making. So amazing attacks, and Russia has obviously responded with fury with the attacks that you mentioned there. So, I mean, I'm not sure if it makes a a lot of difference at this stage for the peace talks, but it just gives no sense of any let up on the front lines. And Ukraine really, it just seems to be trying to find that pain threshold for Russia, but it's very difficult to find. I mean, sort of on one hand, these attacks show that, it's sort of the corruption of the Russian state that you can get so, your security officials through to stage this kind of attack. But at the same time, Russia just has such, the administration there has such great control in terms of media, in terms of the message that comes out. It acknowledged that these attacks happened. It said that, the damage was limited, etc. And it's obviously responded really heavily with Ukraine.
Mike, the first time that they met in Turkey back in May, we actually saw them with an agreement to exchange prisoners, also to try to get to a ceasefire. What are we expecting from this second round?
Yeah, well, look, I mean, Ukraine sort of put a lot on the agenda, that its defence minister will be there and, talks about a truce and all these sorts of things. But even if we go back to that first round of talks, they were releasing prisoners to one another as Russia was launching really significant strikes on Kiev as well. So I guess, we've sort of just got this two-track thing of sort of trying to find a way to end the war, but neither side is going to give any ground, or show any weakness, at least on the battlefield. And Russia certainly is trying to project its overwhelming strength there. So Ukraine has put a lot on the agenda. Really, what it comes down to is what Russia, how interested Russia is in any of this. And for that, we're just going to have to sort of wait and see. I mean, there were a lot of hopes, or fairly high hopes as well, with that first round, because President Trump had sort of sought to put a lot of pressure on both sides. Now, we've got them striking each other hard, but we do have some talks between officials that will go ahead, and we really just have to see. I mean, ideally, I think what Ukraine would want, and certainly what Washington would want, is some sort of truce, some sort of ceasefire that allows them to then get to a stage where they try and work out how to end this war.
How to end this war. Even though that does seem a bit tense, it does seem as if we are kind of getting closer than we normally have been to an actual conclusion here. So that's another thing this week that you might want to be paying attention to, which then brings me to kind of like maybe the most interesting part of today's prep. Elon Musk says he doesn't want to take responsibility for everything the administration is doing. Now, that in itself, I don't find to be the most interesting, but we did have this kind of farewell talk on the 30th between Elon and the President Donald Trump, and basically Elon is parting ways with Doge, returning to his normal life. Now, that in itself is the story, but what's more interesting is he has this black eye. Looks like someone cracked him. This was from that talk on the 30th. And like I said, there's a lot of speculation about what happened, what didn't happen. When he was asked about it, he said it was his son. He was just roughhousing with his son, and his son clocked him. Now, if you've seen the size of his son, congratulations. That kid can actually throw it. Like, he can throw a mean left hook. This is his right eye. So I don't know if his son is like just a secret Golden Gloves boxer, especially at his age and his size, or if something else went on and they just don't want to really tell us. Obviously, I already see it in comments here. He was making a joke that it was basically in France, and like the France's president's wife, who's also maybe potentially his mom or something, she clocked him because there's that weird video of him getting hit. So right now the internet is a buzz of what did or didn't happen, but right here you could hear from Elon himself.
Well, I wanted to ask quickly, Mr. Musk, is your eye okay? What happened to your eye? I noticed there's a bruise there.
Well, it wasn't. I wasn't anywhere near France, so. What does
that mean?
No,
I didn't notice his
First Lady of France.
Getting slapped,
I didn't notice.
What he's referring to right here is a couple days before that, someone noticed a video of the president of France right here, Macron. He was on his plane and someone was clocking him in the face, and they think it's his wife or whoever that lady is.
So, yeah, no, I was just horsing around with Lil X, and I said, go ahead, punch me in the face, and he did. Turns out even a 5-year-old punching you in the face actually does.
That was X that did
Yeah.
X could do it. If you knew X, he
I
could
saw
do
his
it.
mom right now. But I didn't really feel much at the time, and then I guess it bruises up. But I was just horsing around with the kids.
I didn't
basically.
notice it, actually.
President Trump, I got one. I know that you.
Well, I wanted to ask.
I'm going to call bullshit on that. I don't know, something about it, something about the mannerisms, and he already has pretty strange mannerisms. What's the official? Obviously, here in this particular chat, we are the arbiters of truth. What we decide in here is how history is going to be written. So on that, I'd love to push it to you guys to say, do we believe that it was his son who clocked him and apparently is a Golden Gloves level boxer at the age of 5? Or do we think something a little bit more crazy went on and they just don't want it to be publicly announced? Because I see someone saying, I don't care. That's fine if you don't care, but we are here to write the history books. Like what we say here, we are the final stop on the internet, and what we decide is what goes. So it's up to you guys. Please don't take my thoughts or opinions into your consideration. It's 100% you. Obviously, he's saying that it was son. The other rumors of buzz on the internet are that it was Bessent, the Treasury Secretary, and they got into some sort of heated discussion, heated conversation. So Bessent has a little bit of size on Elon's son, so maybe that's a more reasonable person who clocked him. But just in general, if people are just hitting each other in the White House in these meetings, that in itself is pretty crazy. So just wanted to share that. And obviously the larger context, more specific to Neuralink, SpaceX, the Boring Company, his flamethrowers, and Tesla, is really Elon does seem to be putting in clear, concise steps to step away from politics and go back to focusing 100% of his energies on his various companies. So for me, in the medium to long term, I think that's going to be good for Tesla. I think all these sovereign wealth funds, these giant hedge funds, they're going to be a little bit more excited that he's putting more time. There's only so much time in the day, as long as I know of, or at this point, what I know of. So the fact that Elon is now just dedicating a higher percentage to the place where they have like a clear equity investment, I do believe that's going to be a net positive rather than a net negative. All right, that brings us to what the hell to pay attention to today. Today, Monday, June 2nd, we are kicking off a new month. So at 9:45 and at 10 a.m., we are getting some manufacturing numbers. If you look at the money straddle, the expected implied vol from these, the market is not really expecting anything special. Of course, right on the minute that the news is announced, we might see a little bit of jockeying for position, a little bit of a pump, a little bit of a drop, but overall, the implied move on the day is actually relatively small. So they're not expecting this to be anything special. And simultaneously, they're not expecting the 1 p.m. Eastern Chair Powell speech to be anything special either. Once again, the at the money straddle, the just implied vol of the day, they are not elevated, but yet we should still pay attention to these. Once again, 9:45, 10 a.m., and then at 1 p.m., we do have things going down. This 1 p.m. speech from the Fed chair, we will be streaming it. So basically, we're doing the normal show, and then just because I missed out on hanging out with so many of you guys last week, we're already going to be doing a little bit of a double feature today, if you will. So once again, 1 p.m. Eastern, just after lunch, we are going to be streaming again today, wherever you're watching me, whether Rumble or on YouTube, wherever you're finding me right now, you're going to find me at 1 p.m. today. Just so you know, later on this week, because it's the first week of a new calendar month, we get a lot of jobs reports from the previous month. So for example, tomorrow, Tuesday, the JOLTS job openings. Then on Wednesday, the ADP non-farm employment change. And then fast forwarding to Friday, we're going to be getting the unemployment rate, the non-farm payrolls, and the average hourly earnings. So basically, Tuesday, Wednesday, and Friday of this week, we get a lot of important job numbers for what happened last month, the month of May. So from a macroeconomic standpoint, very important. We also happen to be getting the ECB interest rate decision. That's going to be going down on Thursday. Then we're getting some of the non-manufacturing numbers. So basically every single day of this week, we're going to be getting important stuff. So please remember that. And then also, if you haven't already, sign up for the newsletter, mattkohrs.locals.com. Oh, check this out. Look who's joining us. Even Piper missed you guys. How you doing? How you doing? You have anything to say to these guys today? Anything to say? Just to tell them to sign up for the newsletter? Usually she's really talkative. I think you guys are making her a little bit shy. She's not used to speaking to so many different people. She's not used to speaking to so many different people. Anyway, if you haven't signed up for the newsletter, do it. MattKohrs.locals.com. It's 100% free. It's always been free. It always will be free. I break down the previous week, what to look forward to in the upcoming week. I give you a breakdown of earnings. We're pretty much done with earnings season. And then I give you a little cheat sheet of all the major macroeconomic events to expect throughout the week. So obviously you could just check in on this and be like, all right, what do I need to look forward to in that day? And then probably the most useful is the seasonality of each individual trading day. So for example, over the past 27 years, the bulls have won this day 74% of the time, but they're about 10 to 15 years ago when the bears, when they won, was size. So the equity curve is still positive if you were bullish, but not as good as you would expect it to be with a 74% win rate. However, it does get very good talking about tomorrow. Tuesday, June 3rd is actually one of the most bullish individual trading days of the entire year. Now, is that a guarantee? Obviously not. I'm telling you right here that the bulls over the past 27 years, the better part of 3 decades, have won tomorrow. So from market open tonight in the futures market to market open close of tomorrow, they've won it 81% of the time. 4 out of 5 times the bulls win it, and the profit factor is a sky high 17.73. That is ungodly. Here's a look at the equity curve you would have, basically up and up and up, but kind of flat. And then over the past 7 years, the bulls have really started to dominate. So just wanted to share that with all of you. Wednesday, a bit more bearish. Thursday, a bit more bullish. And then Friday, also a bit more bullish. And on that note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Remember, it's just money. You can't take it with you when you go. All right, let's look at Broadcom and let's look at Palantir because they are both looking pretty freaking good out of the gate. I'm going to be doing my best to basically trade nothing this morning until we get the 9:45 report and then also the 10 a.m. report. I don't really think that there's much of a statistical advantage to trading before we have those numbers. So let's just wait and see how the market opens. Of course, I have the options flow and I'll be showing you guys that. And then let me just make sure we'll check this out. Bullish, 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 and testing. Bullish, 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 and testing. So the 5-minute, 10-minute, and 30-minute on both the S&P 500 and on the Nasdaq at market open are bullish, but the 4-hour is testing if it really actually wants to break out. So it's in the middle, but the shorter time frames are favoring the bulls. All right, that's good to know. And then that's the daily chart. We could come back to that as we're waiting for the market open to kind of play out. Here are the key levels of the day, in my humble opinion. As I normally do, the green, the red, and the white are the previous trading session, as in this case, Friday's high, low, and close. Those are the important technical and psychological levels. There are many people who use those for pivot levels, and it's just important to know, are we getting technical breakouts, technical breakdowns, or are we just red or green on the day? So once again, that is the green, the red, and the white horizontal line. That is Friday's high, low, and close. Other than that, I have these white boxes. The white boxes are the transition zones based on the options market. This is both where the gamma and the delta on a 0 DTE basis transition from market makers being supportive and bullish to market makers being bearish and we're going to go down versus, oh, they're actually not really prompting any influence and they're waiting for the market to go one way or the other. So these white boxes are the actual transition zone, which I would very much argue is much more defined by chop. Of like, we're just not getting that nice trend. It's a lot of these times where we get caught in these zones and we just don't really break out. We don't really break down. So that's what those are. And today you can actually see we have a double transition zone. So one embedded within the other, which is really telling me that if we don't have an impetus to break out or to break down, which it might come with the Fed announcement, it might come with the data drop, but until then, I'm basically in the mode of waiting to see if the market can prove it to me. So once again, the white boxes from an options perspective is just, it's a choppy zone, bullish above, bearish below, and within it, just choppy. And then the final thing on the screen you're going to see are these horizontal yellow golden lines, and those are just the major open interest levels, as in where people are, there's a lot of open interest, as in people might have sold those calls, bought those calls, sold those puts, bought those puts. Regardless, it is high open interest, and obviously when that delta goes from 50-50 on one side to 50-50 on the other side. Basically, when stuff goes from out of the money to in the money or vice versa, generically, you do see market reactions because there's some psychology at play there. So another thing to consider. But that's everything on the screen. For me, as I said, I am attempting to not really do anything right out of the gate because I know we have a 9:45 data drop. I know we have a 10 a.m. data drop. And then later on in this afternoon, I know we have Jerome Powell speaking, but I will attempt to be executing my trade between, I guess, that 10 a.m. Data drop and then Jerome Powell's speech later today. Hopefully I can get in and get out before he actually gets talking. So we already see this test happening, the SPY and the Qs making that push up to the closing value from Friday. So right now, 4 minutes into the day, 5 minutes into the day, we're already seeing that red to green test. And in fact, the Qs are almost at their high from Friday, which is crazy. So the Q's coming out of the gate with vengeance. Over here, I'm starting to see more green than I am red. But as always, I truly believe you do not have an advantage chasing at the high of the day. By definition, if you are buying right now, if you do it, I hope it works out for you. But just from a math definition, you're taking on the most risk possible because if it gets smacked here, which it might on the red to green test, what your anchoring point is literally the low of the day. So by definition, you are actually taking on the most risk if you go long right now. Now, once again, if you go long right now, it still might work out for you. But that's, if it does, you're doing what in the world of poker it's referred to as resulting. You're basing the quality of the trade off of how it ends rather than what you should be basing it off of is the quality of the decision to get into the trade. I'm not telling anyone what to do. I mean, I have a lot of bullish positions. Ask anyone in the Discord. I would love for this to rip. I have no bearish positioning right now. I am not rooting against you. If anything, I would just love for this to be green bar after green bar after green bar after green bar. But I think as we're waiting for something to happen, it's also useful to have a conversation about, well, okay, just because things look bullish, does that necessarily mean it's appropriate to take a bullish position? And it's not. In fact, there's a lot of times, most of the time in the market, it's not a good time to be taking a trade, whether getting into it or getting out of it. Just by statistical definition, if you look at every single minute bar out of the day, most of those bars are not a quality decision to be taking a trade, whether bullish or bearish, entry or exits. Most of the trading day is actually just sitting there waiting for there to be a good opportunity. So the chance of you just arbitrarily looking at the market right now and then that overlapping with a good time to be trading, whether bullish or bearish, or buying or selling or whatever it is actually statistically very, very, very low. So just wait for those perfect setups, wait for the trend, whether it's higher highs, higher lows, looking at the EMAs, looking at the options flow, however you personally define your own bias, however you personally define your own trading system, just wait for it. Just stick around. It's going to be all good. Yeah, it's a bunch of undecided candles. Exactly. Speaking of that, even though the market is going up right now, the options flow only popped for about the first 2 minutes. Since then, we're going flat on the S&P 500. And then looking at the Mag 7, the Mag 7 is actually very long and strong. That's some strength out of the gate. Now, granted, we're only 6 to 7 minutes into the trading session, so this could change on a moment's notice. But based on the data we have right now, the Mag 7, which is the options combination of Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla, which between these, they represent about 20 to 40, maybe it's around 30% of the NASDAQ and of the S&P 500. These 7 alone, which is why they're called the Magnificent 7, represent a large influence on the two major indices we pay attention to here, the S&P 500 and the NASDAQ 100. So as long as this trend can continue, as long as we don't see the SPY vomit, I honestly wouldn't mind picking up some long positions on a dip buy opportunity, once again, just to minimize my risk. Right here, back when I was talking at 934, this is why you don't chase the brand new highs at resistance. First of all, you shouldn't be chasing anyway. Second of all, you definitely don't want to chase whatsoever at market open. And then really the third rule is just give the market some time to breathe. Wait for yourself to be able to collect some of this data. Check out the flow. What is the positioning? Where are the EMAs? Bullish, bullish, bullish. Now that's even bullish. Okay, so now everything really is starting to align bullish on a 0 DTE basis. So even this, we're at that key psychological level and also the key open interest level of 5,900. The next thing I would care about is 5,911. Interesting. The SPY is green, but the S&P 500, the actual index, is still red. Once in a while, you see these slight discrepancies because remember, SPX is the actual index. It is like the theoretical perfect index, while SPY is an ETF created to track SPX. So sometimes there's a difference because SPY has to do like, it's not theoretical. It really has the components within it. So it has to do the buying and the selling. So there's a time issue there. Sometimes there's transaction costs that you have to consider. So once again, SPX is the actual perfect S&P 500 index. And then you have things such as SPY, which is an ETF created to track the SPX. So that's why there's this slight differential where some people are saying, oh, it's actually green right now. Well, not really. SPX matters far more than SPY does. SPY is big, it's very liquid, it's very popular, but SPX is even bigger, it's even more liquid, and it's even more popular. So that's why when it comes down to trading these things, if we were to talk about key, important, pivotal levels, I personally care a lot more about SPX than I do about SPY. And my reasoning is pretty much that simple. It's a lot bigger. There's the big money players, institutions, sovereign wealth funds, big banks, big insurance funds. They're playing SPX. They're not playing SPY. It's a lot more liquid. It's just, frankly, a lot more important. But with that being said, SPX, I would argue, is the biggest, the most important thing we could track throughout the day. SPY is actually the second. So it's not here to say, oh, SPY isn't popular. It's not liquid. Yeah, it is. It's popular. It's liquid. But it just happens to be playing second place to the largest, most liquid thing in the entire equities market, into the entire stock market in general. So that's why I end up tracking and labeling all the levels on SPX over SPY. And that's why I care a little bit more about the SPX test of going from red to green than I care about the SPY test going red to green. Hope that makes sense. But just 0DTs and SPX are like 2K. What's your point? Trade spreads. And Piper's SPX stat based, right? No, it is not. It is based on SPY. And the reasoning for that is if you collect the data, SPX's closing value, when you look at the open, high, low, and close, the closing value is based on 415 when it really needs to be based on 4. So if you collect all the daily data on SPY, it'll be the 4 p.m. Eastern time. So it has a lot more to do with the data set that I have and the close, because when you start to trade these, you kind of care more about the 4 p.m. close. There is no point just saying, oh, about the cost of SPX. Well, first of all, it's not 2K because you could go further away or closer to at the price. You could pick different expiration dates, and you could also trade spreads to help mitigate part of the risk. So this idea of just saying it's 2K, it's not. Some of them are 2K, some are more expensive, some are cheaper. That it's silly to say generically when you trade an option that it just has a set price. Folks, if you're new to option trading, whatever this comment is, it's absolutely very, very silly. Remember, options are, the further out of the money you go, they're going to be less expensive because the probabilities of them going in the money are less. And also, the less time you have, they're also going to be cheaper. So if you go super far in the money and also super far out in time, they're going to be extraordinarily expensive because you have a lot of intrinsic value to account for. On the flip side, if you go super far out of the money and you don't have much time, if it's a 0DT, it's actually going to be really, really cheap because once again, the probability of it hitting is low. So whatever this commentary is of like, oh, they're whatever, options are never a set price. That's not how it works. In fact, it would be really, really silly if options had a set price because that's saying that every single thing has simultaneously the same probability of being in the money or out of the money. And obviously anyone who has a rudimentary understanding of numbers and how numbers work would understand that they are not priced like that. So, and then on top of that, if you're trying to trade something and you're like, well, hang on, the nominal value of this options contract is pretty expensive, potentially relative to your account. One thing you could do to combat that is instead of buying calls, you can engage in really what would be, in this case, it would be a call debit spread. And right away, that means you're buying the call that you normally like, but then you're selling a call on top of it and you're receiving some credit. and the credit is going to be less than what you have to pay, which is why it's called a debit spread. And I know we're getting a little bit into the weeds, but for those of you who are like, yo, I would love to trade this stock, the options are just too expensive, I would highly recommend looking into debit spreads. That will be a thing that it helps mitigate the costs, and it really actually kind of protects your downside because it's not going to be as expensive. But the trade-off there, it is also limiting your upside as well. So just throwing that out there for those of you who are like, yo, I would love to trade whatever, NVIDIA calls or Netflix calls or something like that, and the nominal value scares you, I would highly recommend taking a couple seconds. I mean, it's even up on my channel. There's many videos on it, on Rumble, on YouTube, on the internet. Once again, a debit spread is what you would want to search. So that might be something that can help some of you out. But once again, you're looking at a debit spread. Do not confuse that with a credit spread. Those things are both real, and in fact, they're complete opposites of each other. So if you're placing it, make sure if you want a debit spread, you're actually doing a debit spread. If you want a credit spread, make sure you're actually doing a credit spread. Don't get yourself, and this is just because I've done it myself many times before, where I thought I was doing a credit or a debit spread, and I accidentally executed the other one. So just be careful with that. Those are both real things, and they happen to be the exact opposite of each other. All right, so we are potentially seeing the first higher low of the day being put in right now. Remember, at 9:45, we're going to have a report drop. So we have about 30 seconds until that. 30 seconds until that. Here we go. 20 seconds. I'm not expecting some like insane move from this. I'm just saying that there might be a bit of a spike of volatility. Like I said, not only are we in the transition zone, that we're actually in a transition zone within a transition zone, and we're also at a massively important open interest level and key psychological level of 5,900. So right now we're seeing a bit of pinning. Well, the report was somewhat decent. Are they going to bring our boy Rick Santilli on? I would love to listen to our boy. I would love to give us our boy Alaska LNG pipeline project debate. All right. Well, we went up for a couple seconds there, and now we are kind of giving it back. So the initial reaction was good, giving it back. But overall, it's actually an inside bar on the 10-minute. Basically, we opened up. We had a bit of a push. SPY did go green. SPX did not go green. And we're kind of in this weird zone between the closing value from Friday and then this just massively important psychological, technical, and options level at 5,900. So just kind of waiting to see which way that breaks. Are they going to bring on Rick? Why are they bringing this guy on? Why? Give us Rick. Give us Rick or give us death. All right, the report should be loaded up. The S&P Global Manufacturing 52.0 when they expected 52.3, so slightly below expectations. Not a big shocker or anything. All right, where's Rick? Come on.
Far away and ludicrous that it will be ready in 2000. None of us will be alive that I'm looking around here by the time that thing's ready, if that's what we're going for.
Not holding 5,900.
Brian, look forward to more of your coverage this morning. It's been fantastic so far.
Just Thank great. You.
Our Brian Sullivan, not far from Barrow, Alaska. We are getting manufacturing PMI crossing the tape. Let's get to Rick Santelli.
Hell
morning,
yeah,
Rick.
dude! It's a good day.
Good morning.
It's always a good day with Rick.
S&P Global Manufacturing PMI, and it will replace the mid-month read. So this final takes us from 52.3 mid-month down to 52.0. So we shed 0.3%. However, it's still the second best reading of the year, and it's the highest since February, which was the highest of the year at 52.7. It's also the fifth in a row consecutive reading in expansion territory, being above 50.
Above 50 is
Whereas
expansion.
at the end of last year, we had 6 months in a row that finished off 24 that were below 50. We're going to also get ISM manufacturing PMIs at the top of the hour.
Yeah,
Suffice it to
we have
say,
about 12
all
minutes for
maturity
that.
Yields are a bit higher today, equities a bit lower, and Squawk on the Street will return after a short break.
All right, so that one, like you said, second best reading we've had in a hot minute, but still below expectations, just barely below expectations. But the fact that we're over 50 does mean expansion. I'm expecting these ISM numbers to pack a little bit more of a hit for the market, but we're obviously going to find out. So that's in 12 minutes, which is exactly what I'm personally waiting for before I really trade today. I just want to have all the data out there. And then the longer we wait, we're also going to get a better understanding of the options flow. We can see we arbitrarily found a top at 940. And since then, we've been trending down for the past 7-ish minutes. Same thing on the S&P 500. We found a top at 939. We sold off, we bounced, put in a lower high after this lower low, and we got hit again. And we are having a tough time holding this 5,900 level. Granted, we did spend most of the trading session thus far above 5,900, but let's see if we can find some support at the opening value. And it also is just another key open interest level, the 58.95. So let's see if we could bounce off of this and 5,900. One thing that's kind of jumping out to me that I might be interested in is this downsloping trend line. I'll be watching this to see if potentially the 10 a.m. data report can help us get a breakout above that. So on both the SPY, the S&P 500, and the Qs, the NASDAQ 100, I'll be watching this downsloping trend line because overall we're still above where we opened. So I'm just seeing if we can hold onto a higher low situation, get this trend line breakout, and then ideally start to push up closer to the top of my transition zone up here closer to 59.20. So that's kind of where I'm at. The options market on the Mag 7, maybe we're bottoming out right here. And then the SPY's having a little bit worse of a time. It just made a new delta low. Remember, if you're new to the channel, the delta reading on the right side here, that's these colorized lines, the green, tealish, and then the purple. That is just the options flow. If you're new to the world of options trading, as the delta goes up, that's thought to be more and more bullish, and you could have more delta from either buying calls or selling puts. Both of them would push the delta higher. And then obviously for the delta to go lower, that means people are either buying puts or selling calls. That either is removing positive delta or adding negative delta to the system. And obviously the exact opposite would be true if we were to be trending up. So the SPY was looking good up until 939, taking a bit of a hit right now. And then the Mag 7 looked like it was bottoming for a second, but it is no longer getting that bottoming. So like I said, I'm going to wait. I find that patience pays here. And as we're waiting, very quickly, a shout out to today's stream partner. I'm talking about Public. Pinned to the top of chat in the description of the video. This is free to download. This is free to sign up. If you're watching this right now, this is the place for you to be if you're an options trader or an aspiring options trader. And the reason for that is it is the only brokerage that I know of that gives you a rebate every single time you trade an options contract. Doesn't matter if you're buying or selling. Doesn't matter if it's a call or a put. Every single time you trade an options contract, you are going to be earning a rebate. And on top of that, there are no commission fees. There are no per contract fees. Of course, if you just want to trade equities, they have equities trading. There's no payment for order flow. They have crypto trading. They have bond trading. Actually, they have some of the best UI in the game for bond trading. Most brokerages don't even allow retail traders to trade bonds. They now have retirement accounts. They have high yield accounts. This truly is a one-stop shop. I highly recommend you guys check it out. Once again, pinned to the top of chat in the description of the video. This is free to sign up. It is free to download. No commission fees, no per contract fees, and you can get a rebate. This truly is the best offering because I know of no other brokerage. So it doesn't matter if you're making money as an option trader, you're going to make more money on Public because of the rebates. And if you're not making money, well, at least the pain won't be as much because you're still earning the rebates. So like I say, if you are an option trader or an aspiring option trader, check it out. If you're on a different brokerage, you might as well check this one out just to see if you like it a bit better the way I do. There's a reason why I put almost all of my option trading money on Public. It's just because it's simply, in my humble opinion, the best place to be as an option trader. Now, the reason you're going to specifically want to use the link pinned to the top of chat is you're going to start off at a higher rebate tier. There is a different tier system of how much money you earn back. And if you use the link pinned to the top of chat, you're going to start off at a higher tier. So make sure you are using that link and not just generically downloading it, because if you do it, you're going to be at a lower tier. So just to start earning a little bit more money, a little bit more rapidly, make sure you are checking that out. Obviously, a specialty shout out to Public. We've been partnered up with them for quite a while, and the reason is pretty obvious, is because it's kind of the best brokerage to be at. I don't know of a different argument of which would be a better one. And in that time, the market took a hit. The SPY and the Qs are taking a hit. The 5-minute is back on the bearish side of things. So is the 10 minutes. So if it's going to bounce, this is the point to bounce. We got a little bit of a fake out early this morning. We were bullish. Even the 4-hour tried to go back to being bullish. And then all of a sudden, we just got smacked over the past couple minutes. The Nasdaq is attempting to hold. The 5-minute, even though it's diving on the Nasdaq, it's still in the bullish territory. So is the 10-minute, so is the 30-minute, and even the 4 hours just caught up. So it's something on a relative basis in the overall market that we're seeing a little bit more of a hit. That sounds like a scam. No, what's a scam? I mean, I think, what are you talking about? I think our U.S. education system is failing us because I've noticed that people have the worst capabilities of communicating. I use your words there, Paco. Oop, we are now at the bottom of the transition zone and we're potentially breaking down. If this does not hold, the next major level I have is all the way down here at 5850. The bulls need to step in like here, like now, or we're talking about 5850 or potentially even the low that we saw however long ago. I guess that was at 1234 on Friday, the midday dip that then was very much bought back up. You're 100% correct, and it shows every day. Yeah, no, when you read whatever people put on the internet, it really makes you wonder what the writing/English departments across the United States are possibly doing. The average person in this world has no capability of communicating effectively or efficiently, especially when it comes to like more technically dense subjects such as trading. If you only gain and not paying for anything for the trade, bro, what are you saying? If you only gain and not paying anything for the trade, you get a rebate. Bro, you realize that brokerages work by they're getting paid for every time you trade and they just keep it all, and instead public is just giving you some of it back? This just shows the generic lack of how this type of stuff works. Right now, if you look at someone like Robinhood or Webull or Moomoo or Thinkorswim or any of these guys, you ask them, what is their business model? And their business model is every single time you trade, they are getting paid off by the market makers. Every single time. That's why they allow you to trade for free, is because every single time you trade, they are getting paid. It's called payment for order flow, PFOF. What public has done, they say, okay, we will just give our clients back some of the money that they generate, which is why it's called a rebate. It's literally the English definition of the word rebate. It means some money is being generated and you get to keep some of it. That's like the literal definition of rebate. So this is already a practice that's going on for pretty much every single broker in the world, every major broker, at least in the US, where they're engaging in payment for order flow. The difference here is every other broker, they keep all of the money. That's how they make their money. They say, you trade? Cool. That's why, like, Robinhood is the one that really like kickstarted this entire industry of the commission-free model. And then you ask yourself, okay, hang on, if we're not paying for trades, how does Robinhood keep the lights on? They keep the lights on because every single time you trade anything, they are getting paid from the market makers. They pretty much, we know this from, well, at least circa 2021, they just had these massive deals with market makers such as Citadel. So that is the difference here, is if you're on someone like Webull, if you're on someone like Robinhood, blah, 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 every single time you trade, they are making money because market makers are paying them to send your orders to them. Basically, most retail traders suck at trading. It's considered to be like just very, very weak flow, and they just take advantages of that, obviously. So what public has done was basically say, oh, okay, we'll give a rebate on whatever money you're generating from market makers. They give the money back to you, is kind of like the structure. I feel like we're getting into a little bit of the weeds now, but that's how it works. Yes, Robinhood started, but they charge option commission fees. No, they don't. Robinhood does not charge it. The clearing, the OCC does, but that's not Robinhood. So there are certain fees associated with options trading that do not come from the broker, and they do not benefit the broker. So there is a small charge from the OCC, the Options Clearing Corp, and then also depending on the asset you trade. So for example, if you trade SPX instead of SPY, SPX has a different fee, but that's coming from really who created the profit, either the CBOE or the CME, but that's not associated with the brokerage. So there's a fee potentially from the person who is operating the product. In this case, on SPX, it would be like the CBOE or the CME. And then other times there's also charges from the OCC, which is the Options Clearing Corp, which once again, we're really getting into like the depths of market structure here. But that is not something charged by Robinhood. No, they charge 4 to 30. No, they don't. That charge is not from Robinhood, and it does not benefit Robinhood, which is weird because it sounds like I'm defending Robinhood. It's just inherently not how it works. It's just not what it is. So I hope this doesn't come off as me defending Robinhood, because I don't want to defend Robinhood. But if you look at it, you could see the breakdown of what the fees are and where they're going to. Once again, it is not charged by Robinhood, and it does not benefit Robinhood. And honestly, I know I'm saying Robinhood, but the same would be true on anyone. Like if you see a similar situation, you're like, whoa, what is like a couple cents here on Webull? Once again, it's most likely either from, depending on the asset you trade, if you're an SPX trader, you're going to get it from either the CME or the CBOE. And then on top of that, you can see the OCC stuff, the Options Clearing Corp, which is the structural mechanism in the back end connecting the buyers and the sellers. Matt was never a boy in Bulgaria, and it shows. He was actually at the Bitcoin conference. I was like a couple feet away from him. He did a speech at the Bitcoin conference. Closest I've been to that boy from Bulgaria in my life. But with all, I mean, even though, like I said, we're getting deep into the weeds here, with all that being said, I hope you guys can now better understand why you're still, like, you are clearly better off on public than on any other brokerage, because no other brokerage gives you a rebate. Google it, ChatGPT, talk to some fancy schmancy person on Wall Street. There is no other brokerage that gives you part of the fee you're generating back to you, because basically they're all greedy and they all want all of your money. All right, is our boy Rick back on? It is 10.
The week and the month.
Give us Rick.
S&P down 0.6%.
Yeah, lower than expected. Manufacturing PMI prices both missed 48.5 versus 49.3 and 49.4 versus 70.2. So basically all three missed. All three missed.
Thanks to strength in names like Broadcom ahead of earnings, Nvidia's
and we
up
are
this morning.
Going down on it.
Are higher. Meta too. Take a look at treasuries as we kick off the week. We've got some big data releases coming out this week, and we start firmer on yields. A 10-year at 4.426. So elevated a little bit. The 2-year just below 3%. We watch the 30-year carefully. It's just below that key round number of 5%. Coming up this hour, the CEO of pharma giant Bristol Myers Squibb joins us from the Big Cancer ASCO conference on the back of breaking news around a new partnership with BioNTech. And we'll talk to the CEO of Hilton this hour as well about how tariffs and global tensions are impacting travel.
I did
demand.
one trade last night when the futures market opened, which is why I'm up $200 per account.
Yes, good morning. Let's start out with our April construction spending read. Expecting up 0.2.
Rick.
It's down 0.4%. Down 0.4%. And that follows a rather large negative revision to last month, from down 0.5% to down 0.8%.
Ooh, that's
so
not so good.
Back-to-back negatives there on construction spending. Let's go to ISM. These are May reads, and these are the entire read. There's no mid-month on the ISM. Manufacturing, 48.5. That means 3 consecutive readings in contraction territory under 50. Weakest since November of last year, so obviously weakest of this year. If we look at prices paid, moving in the wrong direction in terms of expectations, looking for a number around 69.3. 69.4, it is sequentially a bit lower than 69.8 in the rearview mirror, but that means now we've had 4 prices paid readings that are above 60. which is a pretty powerful level. And you're going to look at interest rates, pay attention to that.
Yields really
Finally,
not
new
moving that
orders,
much.
47.6, following 47.2. That's the fourth in a row in contraction territory. And finally, on the employment front, considering this is the week of employment reports, 46.8, 0.3 higher than 46.5 in the rearview mirror, and that is the fourth contraction reading in a row under 50. So we see interest rates seem to be not paying a lot of attention to prices paid. They are higher on the day, but they've dipped down a bit, maybe because the readings are sub 50 on headline. And of course, the negative, the red ink in equities is bringing in a little bit of buying, pushing yields off their highest levels of the day. Sarah? Back to you.
Okay, makes sense. Thank you very much, Rick Santelli. We do have a big week of data.
Rick
Jobs is the headline
Santelli.
report. We'll get the government jobs report on
Always a
Friday,
barn
but ahead of that, we get the
burner
private
of a
sector
day when
lead.
he's talking. All right, so the initial reaction was down, and now we're going to come up for the test of on this bounce back. If we do bounce high enough, it's more of are we going to get caught up in this kind of like a black hole? Is the gravity of this transition zone, this somewhat of positive gamma, is it going to bring us back up here, or are we going to get a little fake out bounce that gets rejected and then we puke all the way down to 58.50? Only time will tell. Obviously, I do not have any trades on. As I was alluding to, when the futures market opened last night, I did take one little trade just because I thought there was a good setup. I made $200 per account, and now I plan on doing one more trade. This is probably okay. I guess there's another thing we could talk about as we're kind of waiting to see which way this does or doesn't go. Let me zoom in here. Man, that really started to break down at 9:46. The market not liking the S&P global manufacturing numbers, and then really not liking the ISM manufacturing. And that's a good point. They all missed. Every single manufacturer. We had 3 different manufacturing numbers. One came out at 9:45, 2 came out at 10. They all missed. Every single one missed. Here's a look at the Mag 7. That is down. Let me check one more thing. There is support at 50 that I'm seeing. So I wouldn't necessarily be overstaying my welcome on that one. Yeah, that is straight down. All right, I'm giving this a second, but I'm wondering if I could get my scalp in on this bad mamma jamma. Am I on the right thing? I am on the right thing. Oh, golly. How do I want to play this? I'm not swinging for the fences on this one. I'll explain what I've been doing lately. Every single day in Vegas, I was still trading, and I actually had a phenomenal time doing it. It's just more of, is this my time to strike? I'm basically going for one perfect trade. I'm seeing some bearish. That's breaking down. 10 minutes testing. Might bounce off of that. Who knows? I'm watching this. So basically 9:57 to 10:01, we had this range that we puked in. We puked in that range. And now I'm just wondering if we're going to break out of it. Really, we could just look at this. The first minute's reaction. It's pretty volatile. Definitely more volatile on that one. Oh, okay. So I did trade once when the futures market opened last night. That's what this $200 is from. I did that on all of my accounts, and I had to do it on 1, 2, 3, 4, 5. These 5 on take profit. I am now above what I need, so they're pretty much good to go. They're all hunky dory. So I'm pretty stoked about that. Hang on one second. Hang on one quick second. So I don't need to trade these anymore because basically I've hit every metric that I need. So I'm waiting for them just to update tonight, and then I'll be able to convert 3 of them over to be funded accounts. So Once again, these 5 right here, they're just the take profit, I guess, evals. And now that I've traded enough, I followed the consistency rule and I hit the profit target. They're pretty much all good. But then these other ones, obviously, I have 20 funded Apex and then I have 2 funded take profits. Those are the ones that I'm attempting to trade one more time on today to see if I can make a bit of moolah. And what my plan is obviously you guys, for probably most of the sim to funded stuff, you've been seeing me trading NQs over since not last Friday, but the Friday before, just for shits and giggles. I decided to trade ES, and dude, I love it. Like, I absolutely love what I've been doing on ES. It's just so much lower volatility. It's so much lower insanity. Okay, we are getting sucked back up into this. Interesting. This is interesting here, team. This is interesting. Yeah, we got a little bit of a breakout there. We came down. We held this trend line. A quick pop all the way back up to VWAP. A quick pop back up to VWAP. Tick, 500 tick. All right, so both ES and NQ, well, NQ already got back above VWAP, so the bulls are back to being happy. We might have gotten this higher low at 10.06. Yeah, we might have gotten this higher low at 10.06 in here, but let's see. So I'm just waiting, just because I'm trying to pair up, obviously, the options flow. Mag 7's still looking bad. The SPY got a little bit of a pop. If we look at this 5-minute, 10-minute, 30-minute, they're all actually still bearish. So we haven't popped enough, but yet the NASDAQ is actually saving itself. Look at the 5-minute dipped under, bounce, the 10-minute dipped under, bounce, same with the 30-minute. So not 100% sure I'm feeling massively confident about direction quite yet. We easily could just get sucked back up in here and go to 5,900, or simultaneously support, turning into resistance. And let me remind you that the Mag 7 is getting hit. I find this to be the strangest because the Mag 7 has still been selling off, and yet the NASDAQ has actually been having the nicest bounce. We're actually getting almost a technical breakout here. So we're very much in like an awkward area. I mean, if you're overly confident on the bullish or the bearish side, I mean, hey, all the congrats to you, because if anything, I'm seeing a lot of contradictory information. The NASDAQ is getting a nice bounce and the EMAs all are green. Yep, the Delta selling off. On the S&P 500, it has gone flat now, yet we're right up at a key level, which was support. Maybe it's now going to act as resistance. This really has the vibe of even the market is trying to figure out what in the world is going on. So while the market is attempting to figure that out, yeah, we have that trend line. I mean, the Qs are right here testing. Palantir's actually getting hit. Broadcom trying to hold green. MSTR is also up 1%. Interesting. Maybe a little trend line smack here. What would this look like? What does this trend line look like? 83. Interessante. Potential smack right here at 80. Mag 7 is still looking a little rough. SPY is looking a little rough. Oh, what do I want to do? What time is it? It is 10:11. It is 10:11. 10:11. We tried to get out of that range, and both of them got hit.
Order filled.
What did I get a fill at? Right.
Order submitted.
All right, we're going to give this a whirl. All right, so just to talk this out, obviously I'm just playing a trend line breakdown. I'm playing the trend line breakdown paired with weakness in the Mag 7. The Mag 7 has not shown signs of vomiting. It has shown signs of vomiting, but not of bottoming. So Mag 7, I'm seeing a bit of weakness there. Of course, it could turn at any point, but I'm just looking at this generic trend. The SPY tried to get going up until about 10.08, then seeing a bit of weakness. I'm seeing a little pop in price right now. Where is it at? It's at 91. And more so, I'm just seeing that I want to see the 5-minute. So the 5-minute, the 10-minute, the 30-minute, and the 4-hour are all on the bearish side. But since it's close to EMA, it's kind of just well-defined risk. Like I don't have to go like that crazy with it. So that's kind of the thoughts, and more of the thoughts were I thought I was being slick by playing this rejection, and it did get rejected, but that only lasted for about 2 minutes. And now if it gets pushed back up into here, I might be forced to flip. I really I was like, all right, cool. We went up to it. I had these like support between the minutes 10:10 and 10:11, not knowing what this next bar looked like. It literally looked like we just had a rejection and support turned into resistance, which is why I took that breakdown trade. But this, if anything, is a good learning opportunity. You never know the next bar. The next bar brought us right back up to it. The next bar could have been a red bar and we could have vomited down. People are trying to predict, and it's such a stupid fucking thing. I even see it in chat right now, called it like, hey, we're going up or down. Folks, you have no predictive capabilities in the short term. If you're in this short term of scalp trading, of day trading, there are an immense amount of write-ups, articles, research papers, like clearly stating, like, all the data around it. The one thing that we know is true is the shorter the time frame, there's just more noise. If you think about it, the next 1 minute bar, what is going to create that bar? Well, it's going to be based on the buyers and the sellers within that 1 minute. So you're basically saying, hey, I know exactly what everyone's going to do at 10:14 in the morning. It's just not how trading works. It is just not trading works. There's too many unknowns. There's too many unknown variables for you to be that highly confident. The shorter your time frame, it's much more of what is the current setup, and to be more specific about that, it's just what is the risk to reward. You're assuming that you have roughly a 50-50 probability for the next bar on any short time frame. It doesn't matter if it's a 15-second, a 1 minute, a 3 minute, a 5 minute, a 10 minute, a 30 minute. The shorter those time frames, if you're on an intraday basis, your odds are very, very close to 50-50 on the next bar. If you're saying is the next bar green and bullish, 50-50 shot versus the 50-50 shot on the next bar being red and bearish. There's a lot of people in the influencing space who try to pitch this idea that they have some sort of like uncanny ability to predict it with super, super high odds. And in reality, they don't. Like if they did, they wouldn't be doing whatever their profession is. Like I see it so many times, and they're like, oh, I have a win rate of 90, 92, 95, 97%. Folks, you can all easily have that high of a win rate, but that doesn't mean you're net profitable. And when I explain that to people, it blows their mind that you can have a 95% win rate and still end up losing money. And it happens commonly. Because there's such a marketing incentive to be like, yo, you can win 95% of the time, 95% of the time. And they don't tell you that they're still net losing. And the mathematical way that you could have such a high win rate and yet still be a net loser is asymmetric, like reward to risk, as in, even though they're winning 95% of the time, the other 5% of the time that they lose, it's just simply too large of a loss, and then they end up getting clipped. And they don't want to tell you that. They don't want to tell you that at all. And it's just a game of marketing. That's why. That's exactly what's going on. Exactly what's going on is it just sounds really, really good to have a system that wins a shitload, and then they don't tell you it's still a net losing system. Or it gets even worse and they don't have a system and they're just pitching you dumb shit like fair value gaps or whatever the new hot thing is, or Elliott wave theory or Wyckoff theory, or all these fucking theories and ideas. And in reality, they make a lot more off of making content, trying to explain it and trying to pitch it rather than actually trying to trade it. I'm telling you this, in the short term, it is a game of just pure statistics, risk, reward, and what is your expected hit rate. And really, another way to put that is what's your expected value, your EV. You want to have positive EV. And the longer your time frame, it becomes easier because you go from a game of like risk, reward, and expected EV in a trading system to just how good are you at reading fundamentals and doing a fundamental breakdown on a company. Investing is far, far easier than active trading. And I think just because both happen within the stock market, you're either trading or investing in the stock market, or markets in general, people think that they're similar and they're not. They are two wildly different sports that just happen to be playing out on the exact same field. But folks, if you are in this for the easy route, you want to be an investor. Now, even though trading is a lot more difficult, if you're really good at trading, you will make more money. So that's the trade-off. Active trading is far, far more difficult, but the ceiling on how much you could potentially make is much, much higher. While on the flip side, investing is far, far easier, but you're just not going to be making as much money. Now, both you can make a lot of money in, but you have to do what's appropriate for you. You have to be honest about what is your personality type, what is your risk tolerance, what is how much time can you dedicate to the charts, to reading, to trading, to all that stuff. You have to kind of be a little bit more honest about like what as an individual trader and or investor can you do. Now, at a minimum, even if you hate the markets, I would always argue that everyone at minimum should be an investor. Literally to the point of, okay, whatever, you have your retirement account, you have your 401k, you have your IRA, just dollar cost average in the overall market, and you're going to be most likely fine in the long run. So even if you absolutely hate the markets and what they stand for and you want to dedicate no time, it is really not hard just to get involved in the overall market, as in the S&P 500, the NASDAQ 100, the Dow, shit like that. You dollar cost average, you max out your accounts if that's possible, and you come back in 2 to 3 decades and you move on with your life. Like, it is really, really not difficult to be a long-term investor. Trading is wildly different. And that's the thing that, I assume if you're in here, a lot of us are, they're chasing that. How often do you turn your long-term investments into swing trades? Never. And I know that's a good question, and that definitely comes to like a psychology thing. So one thing that I do to help me with that is I just have literally different accounts. I find that little psychological difference of I'm literally logging into a different account. I think it sets my mindset and my psychology properly for that account. So I go into my retirement accounts and I'm kind of in that mode, and I'm like, okay, here's what I do, and they're just there. Sometimes if I feel like the investment's going bad, I'll switch it. If the fundamentals of a company change for whatever reason, or I have made changes to my investment account, but it's more so because the data coming in of why I initially got into the investment has now traded or has now changed. So I never am intentionally saying, okay, this long-term investment is now a swing trade. Some of them, because of other reasons, you might on paper say, hey, it seems like a swing trade. But even in those events, it's a rarity. It's very much a rarity. Very much a rarity. So I do the different accounts. I know that's not for everyone. I think a lot of people do actually like doing the different accounts just because it's just a different mindset. I think it helps keep things a little bit more organized. Well, to be honest, I can't even afford long-term investments, so I take extremely small flips, and I mean that literally. I wouldn't. If you can't afford long-term investing, I truly don't think you should be trading at all. I know if you're in my position, that's a crazy thing to say because, of course, creators, they want everyone to believe that you can make it, and it's not. You, unfortunately, in the game of trading, you need a certain amount of capital to be able to be effective and nimble and to be able to execute upon the ideas you have. And in reality, there's a minimum amount of capital that you need. That's just the God's honest truth. So I'm just saying the markets are going to be here tomorrow. They're going to be here next week. They're going to be here next month. So if anything, spend your time not only learning and trading on a paper account, so when you're ready to hit the pavement, you can hit it running, but focus on other endeavors in your life that generate that money. So this is actually a really important thing. So there's a twofold thing here that you have to consider, a twofold thing. So first of all, just to be nimble and agile and execute the trades that you want to within the market, you need to have a certain amount of capital, and that changes based on the asset, whether you're trading options or futures or equity. So that's an important thing. The second thing you have to consider is, even with the best setups on those things that you have to trade, even with the best setups, you're going to have variance, as in even with the best setup, sometimes you could still lose. So you have to have enough capital relative to your initial bet size that you can overcome just the statistically expected losses. And then the third thing is when you are just funding your account and you need it, you're like, dude, this is my money. I'm having a tough time, whatever, paying my bills, doing XYZ, that type of a thing. There's also all the circumstances that you that pressure, I find, is always the times in my own trading career when I've done the worst. When I specifically need a trade to work, when I'm like, dude, this is my money, it has to work, I'll blow my account out. That pressure, I really think it just in one way or another tricks you into doing the things you shouldn't be doing. When you want it that much, it just becomes too painful. So, or it becomes far, far too difficult. So for those three reasons, the psychological pressure, making sure you have enough money for variance, and making sure you have enough money to trade and execute the ideas you should be trading. When people are coming in and it's commentary like this, hey, I don't even have money to trade in my long-term account, the market's going to be here. It's not going anywhere, folks. It is honestly not going anywhere. Just take the time to learn and practice in a paper trading account, as I said. So when you're ready and you have the capital in your account that you need, you can hit the pavement running. And then other than that, just focus on the other things in your life that are generating money. But when you get to the point that you have to get this trade to work and you have to make money, the odds of your success are effectively zero. In a game, YouTube, I don't know what that means. 100% Matt, don't trade to pay bills. Yeah, it's one of those things that there are many people in this world who trade and they use the money off their trades to pay their bills. But the point is they don't need that next trade to work. They don't have to make money that next week. They can survive the variance of the market and understand that there are downturns and whatnot. And I don't know. I think there's going to be a lot of people in my position who are like, no, you could trade with almost no money and everyone should start right now and you should just trade and trade and trade. And it's just not honest. It isn't. I think everyone should invest, and whatever money you don't need to pay your bills, whatever extra disposable income you have, save a portion of that and put that into a long-term account, because as early as you can, you want to start the compounding process, obviously. But in terms of active trading, you very much should be in a financially comfortable aspect of your life. And I know I'm going against what a lot of the wisdom is, and people are like, I had no money and I started trading and it turned everything around. And those stories I don't believe, and even if they were true, they were so incredibly rare that that's not going to be you. It's not going to be me. I find it's kind of like the sorcerer's stone, You can only find success in trading when you don't need it. Really, I truly believe the psychology of being a successful trader in many ways is aligned with the sorcerer's stone. I really, really believe that. It's as soon as you don't need that trade to work out. It's as soon as your stress levels aren't so fucking high and you're freaking out doing all this crazy shit, that all of a sudden, when things are good and easy and you have money and your stress levels are low, it gets even better, because all of a sudden you start trading lights out. It's weird how it works, but I really believe there is something about the psychology in trading that makes that work. Don't bring Harry Potter into this. Well, I think it's just a really, really good example. It's like making the NBA and telling others that's a profitable way to live your life. Yeah, effectively. Effectively. All right, where are we at? Well, we don't need these anymore. Both the SPY and the Qs are above their trend line, but I believe we are overall still, we're still in this transition zone. We are still very, very much in this transition zone. So we got out of it for a second. And oddly enough, it started 2 minutes before, almost as if someone knew, but about 2 to 3 minutes before, we started to push and make a new intraday low. And then we got the 10 a.m. announcement. And then since then, I tried to play a little bit of a breakdown right. Oh, no, it was either these two bars here at 10:10 or 10:11 or at 10:14, 10:15. I forget which two, but on one of these, I was like, oh, it looks like maybe we're getting rejected at this resistance zone. We're not. We popped up. I'm going to give it a shot here just because I know there's big resistance in this 5-point region. 58.95 is a big open interest level. 5900 is a bigger open interest level and also a key psychological level. So I'm kind of holding on to this. I have my well-defined risk. And this is honestly the beauty of trading ES is if I did this trade, this poor trade in one of these two blocks on NQ, I'd almost be blown out. But because ES is so much just less volatile and really the average daily movement is less of a nominal value, you can take a little bit of heat and still be good, which is why I'm actually becoming a massive fan of trading ES over NQ. And I get that the flip side of it is well, if you're right on NQ, you can make a lot of money. You can make a lot of it very, very rapidly. And that's almost like the trick at the casino that sucks you in is yeah, if you bet on green, you could theoretically make a lot of money. We all get that. But what happens when you go I don't know, on a little bit of a bad run before you know it, you just blow out. I think when the emphasis becomes a lot more of what is the worst case downside scenario versus the best case upside scenario, when you start to get your mind to focus on just the downside, you're going to be far better off. You're going to be so much. That's what good traders do. That's what actual profitable traders do. I know it's going to be pitched by many other finfluencers of fucking gains and gains and gains, and it's just not what trading is. Not what many trading is. I have been in the pressure scenario way too many times, needing the last trade to work so I can trade again. With those lessons well behind, I wouldn't consider day trading until 40K. Well, I wouldn't be putting a number on it like that. I mean, I agree with everything up until that point because it depends on what you're trading. The amount of money you need to trade, even futures versus stocks versus options, is different. And then even within those worlds, it takes a certain amount of money to trade I don't know, let's use RUM calls and puts versus XPX calls and puts. And that's the same thing in futures. You need a lot different amount of money. You need more money to trade NQ than you do ES. So I don't know how you're coming up with 40K, but I don't agree with that. And I don't agree with it because in some cases that would be right. And in other cases it would be wrong. If you're trading NQ contracts, 40K is not enough. It's just not. I mean, I think it costs 18 or 19K to swing an NQ contract overnight. And then there's certain futures contracts that even the margin 40K is not enough. You couldn't trade one. But then on the other side, 40K, if you're trading a micro ES, yeah, you could totally do that. In fact, you could do it with less money. And then that's just the example within futures. When you're trading options, well, if you're a swing trader, maybe you do or don't have to worry about PTT. So you're a swing trader versus a day trader. And then on top of that, 40K, once again, SPX versus SPY versus XSP are all completely different things. So when I see people trying to give out a number, I'd say 5K is good starting for day trading. Well, no, because if you're trading options or equities, you'd have to battle pattern day trading, which means you couldn't day trade because you're going to violate that. So maybe you're then on a cash account. That's what I'm saying is there's so many different things to consider rather than just arbitrarily throwing out a number. Like just putting out a number makes literally no sense because you have to consider your style of trading, the underlying of what you're trading, and the type of an account you have. Like just to throw out a number makes honestly no sense whatsoever. MES 500 min for margin, NQ 100 just to open a micro. MES. NQ I thought was more margin. MES should be cheaper than MNQ. The last time I checked it. I don't know where you're getting this, Luke, that how somehow MES is more than MNQ, but that doesn't sound right. I think you're confusing your numbers. NQ just a micro. That's what the M stands for. M is the micro. MNQ would make it the micro. I don't know how that would be possibly cheaper. Trade station margin requirements. You could look at whatever broker on, and they're going to have the margin requirements. Generally, when I need to check it, I just go to TradeStation. I just literally Google TradeStation margin requirements. So MES right here, intraday initial, you need 240 or 220. That's for one of those. And then MNQ. Yeah, MNQ is more expensive. Luke, I don't know where you're getting that. Luke, stop saying things you don't know. You're just going to be confusing other people. NQ, the initial day just for day trading is 2K, and then NQ is 3K. Luke, stop spreading things that you don't know what you're talking about. NQ, for as long as I can remember, has always been more expensive than ES. Always, which means if you compare MES to MNQ, it's still going to be more expensive. I trade them on Ninja, dude. I literally just showed you. Like, I literally just had them on the screen in front of your face. How could you dude, it literally, it was just in front of you and it was in front of everyone. Is Matt in a trade right now? Yeah. I have a lot of my swing trades on for options, and then I also have a small ES like Apex trade on. Luke works for CNN. It seems like it. I don't know where he's possibly getting his information, but I guess good luck. Luke, if you're trying to cite sim numbers to me, that's the dumbest fucking thing ever. I swear, Luke, if you tag me in something related to sim trading and margins, I am very quickly going to have no respect for you. I swear, if you cite sim numbers as in margin required for sim, that's going to be one of the dumbest fucking things I've heard in a while. Don't do it. Don't tag me in something if it relates to sim. Whoa, what just happened? If you cite some sim number thing to me, I'm going to lose my fucking mind. Don't do it. Don't try to tag me and say, dude, it's sim. Don't do it. Don't you do it. All right. We were battling it out at 5,900. Battling it out at 5,900. What in the world do we have going on here? What in the world? Let's see if it can hold 59. Let's see what in the world can it do here. All right. Obviously we had this failure at 9:46, and then we had a 9:45 report and then also a 10 a.m. report. Seemingly started to recover somewhere in here. The fact that this breakdown, this rejection ended up like catching itself at 10:16, 10:20, somewhere in here. The bulls started to step in, even though the initial market reactions to both of those reports were negative. We started to climb back up. Since then, this is the next major test. Obviously, you could say there was a bit of a test here because we're in the transition zone, but in terms of the options market, the open interest, and just the fact that this is a key technical level, psychological level, this is an interesting test of the day. And it also happens to align, well, now on ES, bullish, bullish, bullish. So we got these fake out breakdowns, somewhere between 950 and 1010. 950 and 1010. Bullish, 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 bullish. Yeah, this is starting to go. All right. I might do the old flipperoo here. I might do the old flipperoo on mine. I was trying to play this failure. I was just trying to go with the current trend of the lower highs, lower lows. This little failure here. But if we actually show strength, yeah, the Mag 7 just got a pop. So something in the Mag 7, the delta just popped. And even the SPY right here, I was involved in this. I was like, oh, okay. And we went up, it started to fail. Just happened to be a higher low. And then we really caught itself here. All right, let's figure this out. 5,900. Mag 7 trending. It was really strong, then pretty freaking weak. And now we're waiting. We are awkwardly waiting. Let's see. All right, so SPX is still in the red, but the NASDAQ is now in the green. SPY, so it's actually SPY is break even. SPX is slightly in the red by 10 points, which is about $1 on the SPY. And then the Qs are actually in the green. So a little bit of choppiness at 9:45, more at 10 a.m. But since then, we're getting a bit of this trend line breakout, even earlier on the NASDAQ. But will it be able to hold? And we kind of had this double doozy. Yeah, it looks like it's the red to green move on SPY, but more important is the fact that we're at 5,900. We're at 5,900. NVIDIA popped. That might have been what caught the bid then on, well, no, it didn't. So Meta more so popped. I don't know. Whoever said NVIDIA popped, you are looking at a different chart, my friend. You are looking at SpaghettiOs. This might be a failure at this key level. All right, so if this does, obviously, if you've been here for any amount of time, you guys know that like when we're in between the zones, I don't really care. I just care about how the market reacts at these key levels that I identify. So the fact that we failed there, well, now I want to know, do we recapture and push above 5,900 or do we get pushed all the way down to 5,880? And if we do, how do we react at 5,880? So that's very much what I care about is basically a push in this fresh high, or do we fail and take out the 1020 low? That's kind of where I am at. Let's see. Patience. Actually, we don't even really need that much patience. Because what we could do is here, first of all, let's redraw all the stuff that we care about. That was a nice trend line break. This is a steep trend line. Not the biggest fan of it. All right, there's really nothing to do or predict. Literally, we just have to sit here with patience and say, are we legit going to get rejected here, or are we just going to put in a higher low and recapture and push? I'm still in my short play, which I'm not the biggest fan of. I was trying to play this rejection here, which ended up not being a rejection at all. It was just like a higher low. At that time, I still really liked the trade just because the delta flow was down, the price action was down, and all the momentum was down. So everything aligned on the bearish side. But once again, coming back to the variance of the market, that was just the variance of the market. And now, if this fails, I might have a shot, but also if we start to recover out of this, which we're showing a bit of strength right now, I actually might flip it to try to get on the right side of whatever this newly created trend is. So I'm watching it very, very closely. Very, very closely. I'm hearing weird noises in my apartment. I don't know what the hell it is. Watching this. Here's a look at the flow. The Mag 7 bottomed out, picked up, little weird. S&P 500 really picked up, then flat, then dropped, but now maybe attempting to pick back up. Like, it seems as if we had one story being told to probably about 10:16. There was from 9:39 to 10:16, the bears were in a bit of control. And then right here, you can see just someone splashed the pot at 10:16 and we started to pop. We'll see. We will see. I don't know. These trend lines are not that helpful in reality. Here's what we'll do is we'll have a bit of a breakdown and a breakout bar. You know, we'll use these. Add alert. Don't want to miss it just in case we are on some other screen. All right. So whether we break down or break out, you guys will know. But in reality, what had happened was we had a little bit of a dramatic reaction to this 10 a.m. announcement. We popped back up to the transition zone. At first, it seemed like it was going to get rejected, but then in reality, we just went right back up to this key level. Massive open interest level, massive gamma level, massive delta level, massive technical level, and a massive psychological level. We ran all the way back up to that. If you caught this long, this was so evidently, 1034 was so evidently the bar to get out on, because you just don't know if you're going to get rejected. Whether you took all of your profits or a portion of your profits, whatever it was, if you caught this and didn't start taking your profits there, you might want to reevaluate your risk to reward management. I'm not saying you had to take it all, but even to scale it out and move your stop to break even on the others, that made a lot of sense, because guess what happens at resistance? Well, sometimes you get freaking rejected. And then if you're playing with enough size to have a runner, well, okay, congrats to you. And if he keeps going, it keeps going. But remember, your goal should be more of this risk management rather than anything else. So surprise, surprise, we ran up here, 1038, a bit of rejection. In the short term, the 1 minute, maybe for those of my technical traders here, shoulder, head, shoulder. I wouldn't really have much confidence on that until we get this quote unquote neckline breakdown at 5889, just where we kind of push and then we dance a little bit between 23, 24, and 25. So kind of watching this, but as really what I want to echo is the fact that I just care about key levels. I don't care about like how we are setting up within these zones. I care about, did we break above and go above? Like, how does the next test of 5,900 go? Or how does the next test of 5,880 go? I just care about the two tests, the bullish breakout test or the bearish breakdown test. When we're in between like this, I just don't think there's much of an advantage. I really don't think, because what we care about is how the big players react to the big levels. Other than that, when you're in the in-between, you're exactly that. You're literally just in the in-between. So calm, cool, collected, I would argue, is the way to go. We have those alerts set up. Is Palantir still getting hit? It's been so strong lately. Meta is going up a bit. Broadcom's going up a bit. MSTR finally putting in a green day. Tesla is just getting its fucking face destroyed right now. Jesus, Tesla's looking brutal. Tesla's looking real brutal. Bullish or bearish? Actually, I think we're perfectly neutral. Both the SPY and the Qs are slightly above where they opened. The Qs are at the closing value. The SPY is below the closing value. The options flow was bearish to bullish to now flat. The price action, more bullish, I would say. We are on top of the EMAs. But we're also not breaking 5,900. If SPX were sitting on top of 5,900, I would say the bulls like have the upper hand, and it's close to happening. But alas, at this exact moment in time, we are not there. But if we were up here holding, actually, one of my systems is about to flip long. It's triggering along. The question is do I want to take it? The question is do I want to take it? Is this a bull flag? You can't really answer that because you're going to see different technical setups on different time frames. So it doesn't really matter. What exists on the 1 minute might or might not exist on the 5 minute width, might or might not exist on the 4 hour chart. Like, that's one of the painful things about technicals is I like technicals to the point of using it for good risk management of saying, okay, like basically if this previous high or low is broken, you either take your profits or you lock in your loss or something like that. Like I like it in terms of risk management. But remember, most technicals do not have predictive capabilities. They don't. By definition, technicals are where price has already been. And that's obviously a lagging indicator. It's something that happened in the past. It's not something forward looking. So all technicals are created off of previous price action. They're not forward looking. So technicals are not the end all be all. I'm not saying I'm against technicals. I do like them for specifically my risk management. But to think that technicals have some sort of predictive capability is a very, very silly thing. What is sim? It's short for simulated, as in paper trading, as in not real money, as in your orders are not actually going to the market. That's what sim stands for. Shortened word for simulated. And speaking of technicals, I think this is best described as range bound. 1034, 1027 right in here. We got up to this range and we are now just going flat. We are just going tweets over technicals. You know, if you knew what some of the tweets were going to be before they came out, honestly, it might be better. So yeah, you could see this today has been the tale of two different stories. The first portion of the day was bearish, seemingly switched at 1016, became bullish. On the Mag 7, started off bullish and then all of a sudden same thing till 1011, then it was flat, started picking up at 1020, and even then it's still kind of flat. The Mag 7 really isn't doing anything. The big moves were obviously early this morning. The NASDAQ bullish, down, up, a little flat. Maybe that is an upward trend, but putting these two distinct moves together, like the linear regression line on our data would just be flat. We're doing a whole heck of a lot of nothing, as in we are just caught up in this transition zone. As in the Discord early this morning around 8:30, I put my thoughts out that that's exactly what would happen. I said, hey guys, I really think this, I would not be surprised if today we are just stuck in here. And there's just not enough of active market participants trying to get us above or below. And when they can't, that just means the market makers reign supreme. And we mean revert back into this transition zone. I mean, not only did we mean revert into the larger zone, we're now even in the smaller, tighter zone. It's going to be one of those days when in reality, it's probably better to sell premium than anything else. Like the market was so evidently not set up for a large move day. It was so evident. We just had a mass amount of call selling and put selling. So all the recent options trades from basically market close on Friday until market open today, it was completely dominated by premium selling on both sides. Just people were selling calls, people were selling puts. So when active market participants are basically saying we are betting on nothing happening today, when everyone's doing that, it ends up becoming a self-fulfilling prophecy, because inherently to get the market to move, people have to be very aggressive to one side or the other. So you can see that in the positioning, and just the positioning was not that today. But I should note that could change because we do have the 1 p.m. announcement from Jerome Powell. So the chairman of the Fed will be speaking at 1 p.m. So based on what he does or doesn't say or his demeanor, that might possibly get enough traders to react in aggregate to one side or the other. So maybe we see some movement, but we had a pop, we had this drop, and then that's pretty much all she wrote today. If we had a little bit of a mean reverting bounce back up, but really ever since 1025, we have been doing nothing, a bunch of nada since 1025. So this might be one of those things where most days patience reigns supreme, but I'm a fan of selling premium today. You could probably sell premium on the extremes and be perfectly fine. I am a fan of, actually, what premium would I sell if I had to sell premium right now? That's a good question. It's a good question. Which way would I sell premium? I don't know. Mag said, like, this stuff is just not trending. I mean, I'm showing you the real-time stuff right here. I'm showing you the real-time stuff. All right, what do we have? Looks like some of the major option trades coming in, 59.20 to the top, 58.50 to the bottom. If we look at this, what do we have here? Yeah, 59.20 is the ceiling, 58.50 is the floor. I would be pretty confident that we're closing within those bounds today. Once again, the floor on SPX, it appears to be being established. 58.50 ceiling. It looks like the current option traders are trying to establish it at 59.20. I mean, that's a lot, like on SPY, that's a $7 zone. And as the day goes on, that will tighten up. I mean, we started at 58.20 to 59.40, and you can see the bets are already starting to come in on the day. Let me check one other thing for all of you. 58.50, 58.80, 59.25, 59.20, 59.20, 59.20. I'm just looking at the major delta, charm, gamma, and Vanna levels of the day. Well, we're maybe picking up. Are we? We're at that 5,900. Does it like it? Yes, no, maybe so. So tomorrow will be crappy Tuesday as well. Where are you getting that information from? Options going to get killed today. That's what the kind of day. Well, most days options gets killed. I remember way back when I read one metric that 95% of premium sold expires worthless. Like, it's just, that's the common thing. Powell is going to crash the market based on what? Jerome Powell, 1 p.m. Does the market react positive or negative? I mean, if someone definitively knew the answer to that, they would not be sharing it with you. If someone definitively knew what was happening, they would not be out there publicly saying it. They would be slinging it in the market, ready to make millions and millions of dollars. Ready to make millions of dollars. Wow, we are literally just range bound. This got born real quick. Real quick. Yeah, even these trend lines, I'm trying to see. It's just sideways consolidation. We're not even really like flagging or anything like that. It's just bullshit sideways. So don't be silly. Don't be over trading when you shouldn't be trading. Is this going to be a no trade event for Take Profit Trader? They email you, but most likely not. The only times I see them doing that are morning announcements at 8:30 a.m. or like really, really big afternoon announcements like the Fed, like in the FOMC announcements. I have never seen them before just doing like a one-off speech as a no trade, but I mean, as they always do, they just email you. So literally, you don't have to ask, Chris. You could literally just check your email. But the fact that I haven't gotten an email, and I don't think anyone's gotten an email, is I think you'll be able to trade in this. What time is JP up? 1 p.m. Eastern. We remain dedicated to our dual focus, blah, blah, blah. Market should rest easy knowing it could go up or down based on market conditions. Yeah, pretty much. How did they already leak that to you? Didn't know that. I'm new to that. We'll check the website, dude. Being new isn't an excuse. That's crazy. You're betting your money. Like, your money is on the line. That's an insane excuse. On the Take Profit console, click on the calendar button and it will show you which events you can't trade on which accounts. Yeah, that's a good example. But the excuse of being new, so, I didn't know. Well, guess what? You could still lose money knowing or not knowing. like many things in life, no one wants to hear your fucking excuse. Especially, like, it's insane to me that people come up with an excuse when you're betting your own money. Like, you're only going to be damaging yourself in that circumstance. Like, that's crazy. Like, fucking grow up, dude. Like, it's your own actual money. They're not going to refund you if you email them and say, sorry, I'm new and I didn't realize like what I should have realized. Like, that's just, I mean, obviously I implore everyone to seek information, but then to try to use that as an excuse of like, hey, like I deserve a break because I'm new. Like that's not good, because it's your money still being risked, whether you know or don't know. Matt, is today's candle undecided? Thus far. Have you taken another trade? No, not at all. I see nothing interesting enough to take a trade off of, like, whatsoever. I see a whole bunch of fucking nada. And as time goes on, we're just going to get closer and closer to lunch. So I just, no, I haven't done anything because I see nothing interesting enough. I mean, the Mag 7 flow is as flat as could be. The SPY is slightly more up. Technically, we are on top of 5,900. So maybe the bulls are starting to gain a bit more control. Maybe we're like, if neutral was perfectly the middle, like we might be tilting a little bit more, and at least you have well-defined risk, which is pretty nice. Maybe I take that trade.
Order canceled.
Maybe. All right. Yeah, I will flip it long.
Order filled. Order submitted.
Okay. Okay. Yeah, I flipped it long. I flipped it long on this, taking out this high right here at 1036. But more importantly than taking out that high, I like that it went up to 5,900, got smacked, fought back up, got smacked, but all of this, it's successfully putting in a higher low, which is telling me that the bulls are getting more aggressive because it's dipping less and less and less. And then even if I'm wrong, I could either risk this 1055 low, which is not far away, or I could risk the 1043 low, which is also not far away. So it's more of I just have well-defined risk. And then if we get this push, my initial target would be the closing value from Friday, 59.11, and then past that we have 59.20 up here. So I'd be watching that as a place of potential rejection. I'd be watching this for a potential place. So this would be target one, and this would be more of my reach target up here. But once again, from a risk reward perspective, just to like clarify why I like this is, okay, let's say this is your breakout bar, roughly up there, roughly right there. So the risk reward is like 1.94. It's 2. It's a 2-to-1 risk to reward. So you only have to be right on these 33% of the time to be break even. If you have a 2-to-1 risk to reward, you only have to be right 1/3 of the time, 33%, and that's your break even. So as soon as you're better than 1/3, you're actually going to be net green. Market down, GME up, ASC 350 likely an additional 100 million of income, 20 cents EPS for the quarter, as well as a great legacy quarter. Wait, I'm trying to understand. You're saying because the SPY is slightly down and because GameStop's up, what's that logic? What? So by your logic, any stock that is green right now is better? Okay, Meta is also green. Broadcom is also green. Nvidia is also green. MSTR is also green. What? I don't understand the point. Like, at all. Congrats. Cool. Like, all right. I don't know if I've ever heard of someone being successful in the market by buying the green stocks when the market is red on a one singular data point. But if that's net profitable for you, congrats. I don't know. congrats. Like, I wish you the best of luck if that is your strategy. I have not heard of a strategy of that type, but dude, if it works for you, it works for you. I'm not going to knock something that makes people money if it actually makes you money. The fact that people still mention GME and AMC makes my brain hurt. Hot take. I think it's actually now worthwhile to talk about GameStop. So I've always said for a while there, like, I don't really care about it until something like actually changes, but something has actually changed. They bought over 4,000 Bitcoin, so it's going to most likely start to behave in the similar manner to MSTR when the underlying Bitcoin prices was driving the stock rather than the company. So if you look at something MSTR, MicroStrategy, well, now called Strategy, it does have a core business, but the core business is much, much smaller than its Bitcoin holdings. And for the longest time, I didn't care about GameStop because I didn't know what was interesting. Nothing was changing up until last week, and now something has changed. And what's changed is they have now a Bitcoin reserve. So a hot take from your boy, I didn't think it was worthwhile to talk about GameStop for years, but now I am switching it up because we have new information. I do. But this argument about GameStop, or excuse me, GME and Pokemon is booming, it's going to be so incredibly small. Like if you're getting into GameStop because Pokemon is booming, that is just not understanding the implications of the revenue drivers for GameStop and Pokemon versus how much Bitcoin they now own. That is, you're reaching on that one. I very, very much understand and agree with the idea of, hey, if you're now bullish on Bitcoin, is there a way that GameStop becomes like a leveraged, retail-based, big community, like driven reason to get into it? Well, potentially, and we could have that worthwhile conversation. But if you think that fucking Pokemon is the reason you should now be in GameStop, no. It's just the Pokemon, which might be massively popular, is not going to be that big of a fundamental driver on a relative basis to the rest of GameStop. It's not like literally just the 4,000 Bitcoin it now has is going to be way, way bigger, way, way bigger. Like it's going to completely dwarf it. So, I mean, I would like for GameStop to go up because that most likely means Bitcoin's going up, and I have Bitcoin, so of course I would like for it to go up. But if that is your like driving theory,
order filled.
What the fuck just happened? What did it get filled on? All of my positions are still live. Oh, I think it clocked the take profit eval. No, the take profit evals are there. Well, now I'm confused. The take profit funded got clocked? Why would they get clocked but the Apex didn't? All the Apex accounts are still alive. I'm confused. Yeah, all these Apex accounts are still very much alive. Well, something just happened here at 11:03. At the turn of the hour, someone started trading. Someone started trading right here. Specifically, someone bought puts and sold calls. So we lost positive gamma and we lost positive delta, and added negative delta. So that was a little double doozy there on the SPY. And then looking at the Mag 7, I assume the same thing. Yeah, right here. Someone sold a grip of calls and they bought a grip of puts, so the delta just dropped. But it looks like it was one big block trade because we're not seeing a continuation from it. It just happened at 11:03 and 45 seconds. So within this 15 seconds, it looks like there was one big block trade that hit, but we're not seeing a continuation from it. We're not seeing a continuation from it. Yeah, it was just like one trade of selling calls and buying puts, and it appears as if the market is already buying it back up. It appears as if the market is already buying it back up. Interesting. I wonder what they saw. All right, well, we're still effectively range bound, so there's that. There's that. Okay, what time is it? All right, just past 11, and the market's range bound, which means this is boring as fuck. So here's the plan. I'm going to see you guys back at 1 p.m. Eastern. We'll start the stream like 10 minutes right before it. So I'll catch up with you guys at like, well, now the market's going even a little bit more crazy. What the fuck was that? Are we getting misprints? Yeah, okay. The SPY just had a misprint. It's not on ES or SPX. So the little pop we just saw on SPY, that was a misprint that they're just running the data from before. If you are thinking, hey, is that a misprint or not? An easy way you could check it is check the equivalent. So if you think you see a misprint on SPY, go check SPX. If it's there, it might be real. If it's not there, it's probably a misprint. Or you could also double check it with ES. Once again, if you're seeing these weird wicks and it's not there in an equivalent one, it's most likely just a misprint, as in the trades probably didn't hit the tape. It's probably just a data issue, but trades like not going through. So anyway, we just got a misprint on SPY that is not there on SPX or ES. So feel free to check that out. Anyway, we'll catch you guys back like at whatever, 12:45, 12:50. So right before 1 p.m., we'll start streaming again. We're streaming again today at 1 p.m. Eastern because Jerome Powell, the chairman of the Fed, will be talking. And who knows, might be a very, very important one. So you never, ever know. So we're going to be streaming that, and maybe we'll get some action in the market from it. But right now, we had a little bit of bullishness this morning, followed by more bearishness, followed by a recovery. And now we're just doing a whole lot of fucking nothing. A lot of nothing. So let's just wait. My base assumption is that nothing that exciting is going to be happening during lunch. So just take a chill pill. Don't be trading when you shouldn't be trading. We all know that we should be sticking to our rules. I'll catch you guys in the afternoon, and maybe we'll have something a little bit more exciting to talk about. That's what I have for you now. Don't forget to show a little bit of love to Public. Remember, if you use that link, pinned to the top of chat and in the description of the video, you're going to start out at a higher rebate tier than you would if you just downloaded the app yourself. So make sure you are checking that out. Make sure you are using that link. It is free to download, free to sign up. There are no commission fees. There are no per contract fees, and you get those sweet, sweet rebates. Alrighty, folks. That's what I have for you right now. I'll catch you on the flippity flip. Have a good one. Peace.